back on Morning Movers. We're taking a look at Target ahead of earnings tomorrow morning. Shares have been under pressure since his last earnings report. Stock is down 8% so far this year. Estimates for adjusted EPS $2.25 on revenue of more than $30.7 billion. Comparable store sales are expected to come in up a little more than 1%. Time now for Options Corner. Joining us to take a deeper look at Target, we've got Rick Ducat, lead market technician here on Schwab Network, the Duke of Data. All right, Rick, take us through the trends you're noticing when it comes to the chart for Target. It's already been a difficult year, really difficult year over year, but take us through some of your trend looks.
Yes, good morning, Diane. You know, and to use a pretty lame pun, Target has really missed the mark. There's no other way to say it, really, because it's just been such a struggle lately. We had this period where it looked like things were perhaps improving. We had a big jump up on earnings here. It transitioned, though, into a descending triangle type of shape where we had fairly consistent resistance coupled with a downward sloping trend line. Then we had a severe decline here, bottoming out near about 120. From there, we did manage to recover somewhat, but look here at this line, 145, a repeated stopping point for price many times here. That's about where we topped out, 145, matched up with our purple 252-day exponential moving average as well. So major resistance encountered there and a major stumble. Now we are finding ourselves below this area, our green line here, 126.50. That was the low point after we had our gap up. That was a similar low right there, with our eyes on that 120 level, Diane, as we start a new trading week here in rather perilous position, I would say.
All right. Yeah, that would be, especially given where we are right now. But what about any recent notable options activity that you've seen?
From looking at the open interest for Target, not really much activity in the near term outside of the March monthly. Those weekly option series, they only have maybe a few thousand open interest. But here for March, total interest about 114,000, roughly 2 times calls versus puts. So a put call ratio of about 0.52 or so. In terms of the calls, most active between 130 to 180, the top strikes, 145, 140, and 130 on the put side. 120 to 140, the most active areas, but mostly the contracts are below about 2,000. So you can see here, these are actually kind of outliers. 130, 140, 135, those are the major areas of interest here.
Okay, those are the major areas of interest and some of the outliers there. Rick Ducat, thanks a ton for the chart on Target. Time now to take us through the trade. We've got Tom White, senior options contributor and co-host of Fast Market. All right, Tom, so how would you structure an example trade, given that we've got earnings in front of us for Target and given the performance of its shares year to date?
Yeah, Diane, implied volatility levels really elevated going into this report. Probably, one, because of the event risk, but then also the 10% slide that we saw in the month of February for the shares to get back down to those levels that Rick kind of highlighted. Remember, the company came out with a mid-quarter update in mid-January. Holiday sales were up 2.8%, but then they lowered guidance a little bit also. So that's going to be a concern. But the bar is really low in this name going into the report. Option market pricing in about a plus or minus 8% move in the shares, about plus or minus $10 either way in the stock. And this comes after last earnings where the stock fell more than 20% after their disappointing results. So if you think this thing, the bar is low and you think it's going to rebound, we got a strategy that takes advantage of that while using volatility dispersion in the strategy. So I looked at a call diagonal 2 weeks wide. That's bullish. So I went out to the March 21st monthly series that expires in 18 days and bought the at-the-money 125 strike call. And then against it, I'm using what the option market's pricing for that one standard deviation move. In the near term, March 7th weekly options that expire in just 4 days, I'm going to sell the 135 strike call. So a bullish $10 wide call diagonal to the upside. I'm paying a debit of roughly about $4.50. That's where it should be trading if the stock opens up just above 125. So if you pay that $4.50 debit, you're paying less than half the width of the call diagonal. And that's the bonus part of this. Anything above about 127 is going to be profitability on this one. So you definitely need to move higher, but that's only about 1.5% above the current share price. Now, I talked about implied volatility levels. What makes this call diagonal that's $10 wide and 2 weeks wide worth less than half the width of it. You're paying a debit of $450. There's your risk, $450. Is because you're buying about a 57% implied volatility on aggregate in that March 21st monthly cycle where you're buying the 125 strike call, selling about 102% implied volatility on aggregate in that March 7th weekly cycle where you sold the 135 strike call. You'll have the opportunity to roll that short call a couple times as you get closer to expiration, but this might be the way to play it if you think we're going to see a rebound in the shares post-earning, taking advantage of that dispersion between implied volatility levels in different option series on this one.
And then, Tom, what made you choose a bullish call diagonal as the strategy for how to structure this example trade?
Yeah, this is just one of the ways that you can play it for a bullish type of sentiment. But what I kind of focus on, especially going into earnings, when you see near-term implied volatility levels so elevated, it gives you some more opportunities to buy lower priced or lower cost, lower risk type of strategies that take advantage of that upside move where you only have one break even. Anything above that break even at 127 is going to be profitability.
All right, that's an example trade for Target. A bullish call diagonal is the strategy there. Shares of Target a little bit higher up by just shy of 0.75% in the pre-market.